Property and Casualty Insurance Practice Exam. Question 1. While checking exclusions, a surety bond involves which three parties? Option A, principal, obligee, and surety. Option B, driver, mechanic, and witness. Option C, tenant, landlord, and neighbor only. Option D, insured, doctor, and patient. The correct answer is option. Surety bonds involve a principal who must perform, an obligee who requires the bond, and a surety that guarantees performance. Insured, doctor, and patient is wrong because insured doctor-patient is not a surety relationship. Tenant, landlord, and neighbor only is wrong because tenant, landlord, neighbor lacks the surety role. Driver, mechanic, and witness is wrong because driver, mechanic, witness is not the bond structure. Question 2. When comparing policy terms, an insured keeps a small predictable loss exposure instead of buying insurance. Which risk management technique is this? Option A, duplication. Option B, retention. Option C, transfer. Option D, avoidance. The correct answer is option. Retention means keeping part or all of a risk instead of transferring it. Transfer is wrong because transfer shifts risk to another party such as an insurer. Avoidance is wrong because avoidance means not engaging in the activity. Duplication is wrong because duplication is not the standard technique here. Question 3. During a claims discussion, a policy covers only causes of loss listed in the policy. What coverage approach is this? Option A, named perils. Option B, open perils. Option C, all losses without exclusions. Option D, self-insurance. The correct answer is option. Named perils coverage applies only to perils specifically named. Open perils is wrong because open perils covers direct physical loss unless excluded. All losses without exclusions is wrong because all losses without exclusions is not how standard policies work. Self-insurance is wrong because self-insurance means retaining risk. Question 4. When comparing policy terms, a completed product injures a customer after it leaves the business. Which CGL hazard is involved? Option A, premises operations only. Option B, personal auto PIP. Option C, workers' compensation. Option D, products completed operations. The correct answer is option. Products completed operations covers certain injury or damage arising from products or completed work. Premises operations only is wrong because premises operations concerns ongoing operations on premises. Workers' compensation is wrong because workers' compensation covers employee injuries. Personal auto PIP is wrong because PIP is auto no-fault medical coverage in some states. Question 5. For a practice question, a 5-year-old roof is damaged and payment subtracts depreciation. Which valuation method is used? Option A, stated amount only. Option B, replacement cost without deduction. Option C, the actual cash value. Option D, the agreed value. The correct answer is option. Actual cash value generally reflects replacement cost minus depreciation. Replacement cost without deduction is wrong because replacement cost pays without depreciation subject to policy terms. Agreed value is wrong because agreed value uses a value agreed in advance. Stated amount only is wrong because stated amount is not the same as depreciation-based ACV. Question 6. In a risk management example, a non-admitted insurer provides coverage unavailable in the standard market. Which market is involved? Option A, workers' compensation assigned risk only. Option B, Medicare supplement only. Option C, personal auto no-fault only. Option D, surplus lines. The correct answer is option. Surplus lines insurance uses eligible non-admitted insurers for risks not placed in the admitted market. Medicare supplement only is wrong because Medicare supplement is health insurance. Workers' compensation assigned risk only is wrong because assigned risk is a different mechanism. Personal auto no-fault only is wrong because no-fault is an auto injury system. Question 7. While reviewing a policy, a condominium unit owner needs coverage for interior property and personal liability. Which form is typical? Option A, commercial package policy only. Option B, workers' compensation policy. Option C, HO 6. Option D, HO 4. The correct answer is option. HO 6 is designed for condominium unit owners. HO 4 is wrong because HO 4 is for renters. Commercial package policy only is wrong because commercial package policies are for businesses. workers' compensation policy is wrong because workers' compensation covers employee work injuries. Question 8. While checking exclusions, which homeowners coverage applies to personal property? Option A, coverage C. Option B, coverage A. Option C, coverage B. Option D, coverage E. The correct answer is option. Coverage C is for personal property or contents. Coverage A is wrong because coverage A is the dwelling. Coverage B is wrong because coverage B is other structures. Coverage E is wrong because coverage E is personal liability. Question 9. When comparing policy terms, a policy change is added to modify coverage. What is this called? Option A, coinsurance. Option B, subrogation. Option C, endorsement. Option D, arbitration. The correct answer is option. An endorsement amends the policy by adding, changing, or removing coverage terms. Subrogation is wrong because subrogation is recovery from a responsible party. Coinsurance is wrong because coinsurance is a sharing requirement. Arbitration is wrong because arbitration is a dispute resolution process. Question 10. During a claims discussion, a fidelity bond mainly protects against what? Option A, earthquake damage. Option B, employee dishonesty. Option C, auto collision. Option D, wear and tear. The correct answer is option. Fidelity bonds protect an organization from dishonest acts such as employee theft. Earthquake damage is wrong because earthquake damage is property catastrophe exposure. Auto collision is wrong because collision is auto physical damage. Wear and tear is wrong because wear and tear is commonly excluded. Question 11. When advising a policyholder, a fidelity bond mainly protects against what? Option A, auto collision. Option B, employee dishonesty. Option C, wear and tear. Option D, earthquake damage. The correct answer is option. Fidelity bonds protect an organization from dishonest acts such as employee theft. Earthquake damage is wrong because earthquake damage is property catastrophe exposure. Auto collision is wrong because collision is auto physical damage. Wear and tear is wrong because wear and tear is commonly excluded. Question 12. When comparing policy terms, which homeowners coverage applies to personal property? Option A, coverage B. Option B, coverage E. Option C, coverage A. Option D, coverage C. The correct answer is option. Coverage C is for personal property or contents. Coverage A is wrong because coverage A is the dwelling. Coverage B is wrong because coverage B is other structures. Coverage E is wrong because coverage E is personal liability. Question 13. For a practice question, a fire damages a home and the homeowner must protect property from further damage. Which policy provision applies? Option A, insuring agreement only. Option B, duties after loss. Option C, definitions only. Option D, appraisal clause only. The correct answer is option. Duties after loss require reasonable steps such as protecting property and notifying the insurer. Insuring agreement only is wrong because the insuring agreement grants coverage but does not list all post-loss duties. Definitions only is wrong because definitions explain terms. Appraisal clause only is wrong because appraisal handles valuation disputes. Question 14. On a property and casualty item, a policy covers direct physical loss unless the cause is excluded. What coverage approaches this? Option A, warranty coverage only. Option B, open perils. Option C, coinsurance. Option D, named perils. The correct answer is option. Open perils coverage starts broadly and then removes excluded causes. Named perils is wrong because named perils coverage requires the peril to be listed. Warranty coverage only is wrong because warranty coverage is a product concept. Coinsurance is wrong because coinsurance is an insurance to value condition. Question 15. For a practice question, a person burns property intentionally to collect insurance. What hazard is shown? Option A, morale hazard only. Option B, moral hazard. Option C, static risk. Option D, a physical hazard only. The correct answer is option. Intentional dishonesty for insurance money is a moral hazard. Physical hazard only is wrong because physical hazards are tangible conditions. Morale hazard only is wrong because morale hazard is carelessness rather than intent. Static risk is wrong because static risk is a category of risk and not the dishonest act. Question 16. During a licensing review, an insurer pays a claim and then seeks recovery from the negligent party. What right is being used? Option A, concealment. Option B, twisting. Option C, rebating. Option D is subrogation. The correct answer is option. Subrogation allows the insurer to recover from a responsible third party after paying the insured. Concealment is wrong because concealment is hiding material facts. Rebating is wrong because rebating is an improper inducement in many states. Twisting is wrong because twisting is misleading replacement of coverage. Question 17. During a claims discussion, a policy pays to replace damaged property with new property of like kind and quality without depreciation. What valuation is this? Option A, market value only. Option B, replacement cost. Option C, book value. Option D, actual cash value. The correct answer is option. Replacement cost pays the cost to replace covered property without deducting depreciation. Actual cash value is wrong because actual cash value subtracts depreciation. Market value only is wrong because market value reflects selling price and may differ from repair cost. Book value is wrong because book value is an accounting value. Question 18. When explaining coverage, loose wiring in a building is what type of hazard? Option A, physical hazard. Option B, legal hazard only. Option C, moral hazard. Option D, moral hazard. The correct answer is option. Loose wiring is a physical condition that increases the chance of loss. Moral hazard is wrong because moral hazard involves dishonesty. Moral hazard is wrong because moral hazard involves carelessness due to insurance. Legal hazard only is wrong because legal hazard involves laws or litigation trends. Question 19. In an insurance exam scenario, insurance works best by combining many similar exposure units. Which concept supports this? Option A, latitude and longitude. Option B, depreciation recapture only. Option C, First Amendment. Option D, the law of large numbers. The correct answer is option. The law of large numbers helps insurers predict losses more accurately with many similar exposures. First Amendment is wrong because the First Amendment is constitutional law. Depreciation recapture only is wrong because depreciation recapture is a tax concept. Latitude and longitude is wrong because latitude and longitude are geographic coordinates. Question 20. While studying insurance basics, people with higher than average risk are more likely to seek insurance. What is this called? Option A, subrogation. Option B, deductible. Option C, appraisal. Option D, adverse selection. The correct answer is option. Adverse selection occurs when higher risk applicants seek or keep coverage more than lower risk applicants. Subrogation is wrong because subrogation is recovery after payment. Appraisal is wrong because appraisal values a disputed loss. Deductible is wrong because deductible is the insured's loss share. Question 21. On a revision question, which policy page usually lists the insured, limits, premium, and covered property in review item 61? Option A, exclusions page only. Option B, marketing brochure. Option C, glossary only. Option D, declarations page. The correct answer is option. The declarations page summarizes key policy-specific information. Exclusions page only is wrong because exclusions list what is not covered rather than all key facts. Glossary only is wrong because a glossary defines terms. Marketing brochure is wrong because a brochure is not the policy contract. Question 22. A policy pays to replace damaged property with new property of like kind and quality without depreciation. What valuation is this? Option A, replacement cost. Option B, actual cash value. Option C, a market value only. Option D, book value. The correct answer is option. Replacement cost pays the cost to replace covered property without deducting depreciation. Actual cash value is wrong because actual cash value subtracts depreciation. Market value only is wrong because market value reflects selling price and may differ from repair cost. Book value is wrong because book value is an accounting value. Question 23. In an insurance exam scenario, money collected as premium by a producer should be treated how? Option A, as money that never needs records. Option B, as fiduciary funds handled according to law. Option C, as a gift from the insurer. Option D, as the producer's personal spending money. The correct answer is option. Premium funds are held in a fiduciary capacity and must be handled properly. as the producer's personal spending money is wrong because personal use can be conversion or theft, as a gift from the insurer is wrong because premiums are not gifts, as money that never needs records is wrong because records are required for accountability. Question 24. When comparing policy terms, a business installs sprinklers to lower fire damage severity. Which risk management method is used? Option A, avoidance. Option B, reduction. Option C, concealment. Option D, speculation. The correct answer is option. Sprinklers reduce the severity of a possible fire loss. Avoidance is wrong because avoidance would eliminate the activity or exposure. Speculation is wrong because speculation involves chance of gain. Concealment is wrong because concealment is withholding material facts. Question 25. For a practice question, money collected as premium by a producer should be treated how in review item 79? Option A, as the producer's personal spending money. Option B, as money that never needs records. Option C, as fiduciary funds handled according to law. Option D, as a gift from the insurer. The correct answer is option. Premium funds are held in a fiduciary capacity and must be handled properly, as the producer's personal spending money is wrong because personal use can be conversion or theft, as a gift from the insurer is wrong because premiums are not gifts, as money that never needs records is wrong because records are required for accountability.